Imagine walking into a store with only $20 in your wallet. You spot a brand new pair of sneakers that cost $200. 10 years ago, the answer was simple. You couldn't afford them. Today, your phone tells you something very different. Pay just $50 today. Suddenly, those sneakers feel affordable. You tap one button, walk out with the box in your hands, and barely think about the remaining payments. It feels almost like free money. But that's exactly where the story begins. Because by now, pay later isn't really changing the price of the product. It's changing how your brain experiences the price. And that small psychological shift is quietly transforming the way millions of people spend money. Over the last few years, by now, pay later has exploded across online shopping. Instead of paying the full amount up front, shoppers can split purchases into several smaller payments. At first glance, it sounds like a win for everyone. Consumers get what they want immediately. Stores sell more products. Payment companies earn fees. Everybody seems happy. But when something in finance looks too convenient, it's usually worth asking a simple question. Who benefits the most? The answer begins with psychology. Imagine seeing two buttons while shopping online. One says pay $400. The other says pay $100 today. Even though both options lead to paying the same total amount, your brain reacts very differently. The smaller number feels less painful. That's because humans don't naturally evaluate the full future cost. We focus on today's payment. Behavioral economists call this present bias. We naturally value immediate rewards more than future consequences. By now, pay later didn't invent this habit. It simply built an entire business around it. That's why many people end up buying things they never planned to purchase. Not because they suddenly became irresponsible, but because each individual payment feels harmless. One payment here, another there, then a new pair of headphones, a new phone, new clothes. Individually, each monthly payment seems manageable. Together, they quietly become another fixed expense competing for your paycheck. This creates what many financial experts call payment stacking. Imagine carrying one backpack. It feels light. Add another, then another. None of them feels heavy on its own. Eventually, you're carrying 5 backpacks without realizing how much weight you've accumulated. That's exactly how installment payments work. Every purchase seems small until all the payments arrive in the same month. The danger becomes even greater when unexpected events happen. Maybe your hours at work are reduced. Maybe your car needs repairs. Maybe rent increases. Suddenly, those small payments you barely notice become obligations that can't be ignored. Missing a payment can trigger late fees, damage your financial reputation with some providers, or force you to borrow even more money just to stay current. The convenience that once felt freeing can quickly become another source of financial stress. Here's another uncomfortable truth. Stores love buy now, pay later because people usually spend more when they use it. Numerous retail studies have found that shoppers tend to increase the size of their purchases when installment options are available. It's easy to understand why. If a $400 purchase feels like $100 today, adding another item to the cart suddenly doesn't seem like a big decision. The payment changed. The price didn't. This is where, by now, pay later starts looking less like a payment method and more like a marketing tool. It removes friction from spending. In traditional shopping, seeing a large total forces you to stop and think. Installments soften that moment. They encourage action before reflection. That's incredibly powerful because the easiest purchase to control is the one you never make. To be fair, buy now, pay later isn't always bad. Used carefully, it can help people spread out necessary expenses without paying high credit card interest. The problem isn't the tool. The problem is using it for things you don't truly need or opening multiple installment plans without understanding how they add up. Just like fire can cook dinner or burn down a house, the outcome depends on how it's used. The bigger picture goes beyond shopping. Buy now, pay later reflects a broader change in modern finance. Companies are no longer competing only for your money. They're competing for your attention, your impulses, and your willingness to spend before you fully think. The easier it becomes to buy today, the harder it becomes to remember tomorrow's bills. And perhaps that's the biggest irony of all. Buy now, Pay later promises flexibility, but for many people, it quietly reduces it. Every future payment becomes another promise your future self has to keep. The real question isn't whether by now, pay later is good or bad. It's whether convenience is making financial decisions easier or simply making overspending feel painless.